everyone, and welcome to today's webinar. My name is Emily Catlin, and I am the Investor Relations Manager here at VentureCrowd. I'm speaking to you today from the land of the Turrbal Nation, and I recognise their custodianship of the land and pay my respects to the elders past, present, and emerging. Your engagement during this webinar is welcomed and encouraged, so please make use of the Q&A icon at the bottom of the webinar screen to pose any questions or comments today. We've allowed sufficient time at the end of the session to address and respond to each question or comment. Joining us today is VentureCrowd CEO, Steve Mabani. Steve is a corporate lawyer and a former PwC partner specialising in funds management and financial services. He has advised on the establishment of many of Australia's leading venture capital funds, including Corporate Venture Capital, as well as co-founding Australia's first multi-asset class equity crowdfunding platform, VentureCrowd. Steve will be joined by VentureCrowd's Head of Investment Management for Ventures Business, Johnny Quattro. Johnny is a qualified computer scientist and serial entrepreneur. Johnny's best known for founding Jam, which serves millions of smartphone users around the world and created 5 multiple award-winning apps in partnership with Apple and its iOS platform. Johnny is a senior leader in VentureCrowd venture capital team. So now, Steve, it's over to you.
Thanks, Emily. And thank you everybody for joining us. I am super excited to be speaking to you tonight to give you an update on how our business has performed over the last 12 months and also to announce the launch of our latest technology product, which we believe will be an absolute game changer for VentureCrowd, but also for the industry. But before we do that, for those that are less familiar with VentureCrowd, possibly myself, let me set the stage. So as Emily mentioned, we might just go to the next slide, Em. As Emily mentioned, I am a corporate... No, the very first one.
Sorry.
That's okay. There. Okay, cool. All right.
We're back.
Thank you. We're back. We're back. Technical issues. So as Emily mentioned, I'm a corporate lawyer by training, and I was previously a partner at PwC, where I led the venture capital practice for the firm. At a time when the venture capital industry was very much a cottage industry. I did work on the establishment of many of Australia's now very well-known VC funds, and then with those fund managers to design and implement their due diligence programs, their investment processes, and then work with them on the due diligence into various companies that they were investing in. I also sat on the Sydney Angels Management Committee, and so I got to see and work with a range of angel syndicates who were investing in lots of different startups for many, many years. And perhaps 25% of my practice was working with high growth companies to help them to become investor ready and then to help lead their capital raising campaign. So I know firsthand how difficult it is to raise capital for private companies through traditional sources of private capital. The bottom line really is the problem we're trying to solve here is that the traditional private capital markets have been inefficient for decades. They suffer from fragmentation, from a lack of transparency, from restriction of access, and ad hoc rules of engagement with different participants, VC firms, family offices, angel groups, all of whom will have different investment committees with different levels of experience and appetite, with different rules of engagement. And all of that makes it very, very difficult for the true universe of potential investors to find and invest in the deals that are right for them. And as a result of that, it's artificially reduced the size of the private capital markets, making capital raising, we think, unnecessarily harder than it needs to be for the founders who are the game changers of the future. I don't think it's a supply issue, but a connectivity issue. Connectivity between investors and deals, that is really the problem. And that is the problem that we set out to make a contribution to at VentureCrowd. We believed back then that in the same way that the media industry, the entertainment industry, the hospitality industry, travel, retail, and so many other industries had become more efficient through digitization, the same thing would happen with financial services and the investment markets. and that our sole focus should be to digitize those processes to remove inefficiencies, remove intermediaries that don't really add a lot of value to the process, and put the power back into the hands of the people that really need it. And that is the founders and the investors that are the key stakeholders in these kinds of transactions. So at VentureCrowd, what we do is we democratize access to a wide range of alternative assets for both sophisticated and for retail investors who were previously excluded from investing in things like venture capital, like property development projects and private credit. So far, we've built a digital investment platform that facilitates the entire investment process from deal awareness all the way through to customer nurturing, investor education, due diligence, transacting online, the issuing of securities, unit certificates and shares and so on, all the way through to the management of an investor's investments using a password-protected investor portal, which gives them an opportunity to access all their information, to receive updates from companies and so on and so on. So we've built that already. We've been using that for years and we know that it works. So over the last, so to date, we have raised over $320 million worth of total capital. We've got over 74,000 registered members. We've assisted more than 150 portfolio companies and are sitting on more than $20 million worth of unrealized performance fees as a business. Last year, in one of the hardest private capital markets I've certainly ever seen, not just in Australia, but globally, our investors invested over $53 billion in a range of companies. And in a very, very difficult and a very constrained private capital market, we think that's a really good result. Last year, we generated just under $6 million worth of gross revenue. That was lower than our target, but again, in a very difficult year, we think that's a respectable result. And that gross revenue number reflects just over a 36% gross margin. In the same year, we distributed over $7.6 million worth of income distributions to investors in a variety of different products that they had invested in through us, taking our total investor distributions of all time to just over $23 million. I'll leave the rest there, but I think the long and short of it is that over the last few years, and notwithstanding some difficult market conditions in 2023, our businesses continue to grow from strength to strength, and we've continued to invest in some really interesting pieces of technology in our team and a number of other things which set us up for real scalable growth into the next phase. But even with those strong results in a very difficult year, we know that there's significantly more value to create by continuing to build on our existing investment technology infrastructure and really transitioning VentureCrowd from being a digital services business, which is what we are today, to becoming a full digital platform business. So over the last 12 months, we've been working really hard in the background to upgrade our team and to restructure our business to operate much more like a technology company than a financial services business that uses digital tools. We have brought our technology and engineering teams in-house. We have appointed a chief technology officer to oversee the execution of our technology roadmap. And critically, we have said no to lots of different initiatives so that we can focus on one thing and one thing only, and that is to build the best possible digital capital raising product in the market. And that's it. That is our sole focus. We have already built a digital investment platform that facilitates the entire investment process for investors, as I mentioned. And now we are focused on digitizing the capital raising campaign process for founders and upgrading our internal technology to ensure best in market consumer experience improvements across all touch points of our business with a first-rate team. Now, the first part of that roadmap is now live as of yesterday, and it's in market as of yesterday. And so we're thrilled to share it with you tonight. So I'm going to hand over to Johnny, who is the head of investments for our venture capital business. And as you just heard from Emily, has a pedigree in building and scaling and selling digital products globally. So Johnny, over to you.
Thank you, Steve. I really appreciate that. That was great. Great, great discussion piece. Awesome, awesome. Yeah, thank you, everybody. Welcome, and I'm really excited about this journey. I think for the first time, in the entire industry of venture capital, are we seeing this transition into digital? And what we have just launched is a pure digital EOI platform. And an EOI platform is essentially the first part of the journey for a founder. And when the founder is launching their business or looking to, raise investment capital, they need to, put the feelers out and make lots of introductions. And it's a very arduous process to raise capital for the business. And what we have done at VentureCrowd is we've developed an EOI software platform that enables founders to publish an investment opportunity web page. And this web page is essentially a dynamic, simple and dynamic web page that looks like any basic, landing page, but it describes their opportunity, and they can share that with their investment community, or they can share that with their friends and family, and garner expressions of interest with a very simple click. And let's dive into the features. So the key features are so a founder can come online and basically sign up and create an account. And this account enables them to just basically dive into the platform, get a first taste of the platform. And what we're collecting there is we're collecting founder information. So we're collecting information like the founder's business name, their ABN, any details like contact details, the core bits of information that we need to create a founder account. And then once that's done, they can then move on to the next step, which is basically to develop the EOI. So they move into this EOI builder, and I'll dive into the details a little bit in a few seconds. And once they go into the EOI builder, they can sort of manipulate the software, and they can start dragging and dropping photos and images and text and so on to create their web page. Then they move on to the next part, which is the publishing part. So once they've developed their EOI page, they are then able to submit their EOI page to our ventures team for publishing. And then essentially it goes into our backend system. And our backend system is a sort of an internalized review system that will look at the page and determine a few elements about the page, whether it's the right type of content, or help the founder improve the content, et cetera, et cetera. And then they move on to the next part, which is once that's published, they move on to the next part, which they can then publicly share that page and then start to get investor traction and investor interest, and they can track those investors. So let's dive in a little bit deeper and have a look at some of these features here, the core features. So the core features, like when we look at this founder create page, this is a really great. So this is the landing page that a founder will click on once they go to venturecrowd.com.au and click on the raise button. So they're looking to raise capital. They click on a button, and then basically what happens is they're able to create a page. So let's see this demo. So we get started, and it dives into this first page where we capture the founder's information. And it's critical because for us, it builds the founder as a contact in our database. And the founder can just simply put in the very simple bits of information, their name, their email, their phone number, and some of their, they create their password account, and what they get is they'll get, verification. Once they set up, they register, they go into a two-factor authentication process, and they've created their account. And then the next step is they start to build their business. So they add a few details about their company, the company name, the company website, what industry they might be in, whether it's a fintech industry or whether it's, agri-tech or food tech. They enter in their ABN, and then once their ABN is keyed in, we'll wait for the demo. Once their ABN is keyed in, they sign me up. They sign themselves up, and they'll go through this process. We will qualify them as a founder, and then I think we move on to the next. Is that right there? What's it doing? There we go. Sorry. Yep. Then it's going through a two-factor authentication step, which we need to qualify their details. And once their details are qualified, they move on to the next slide. And so once that's done, they move on to the EOI builder. And in the EOI builder, it's really this is the magic. This is where the magic happens. Essentially, the founder can immediately, after signing up, start to create their company page. They can start adding images. They can, upload images from their desktop or their phones or however they decide to build this, because it's a mobile-friendly version as well. So this can be done on the fly. If you're sitting on the train and you're needing to go from, Tokyo to Osaka and you want to build your company, well, you can build it right there on the Shinkansen at 200 miles an hour. So it's pretty amazing. And so you'll add in details like your team, your founders, your company highlights, all the kinds of text that you need to describe your opportunity, your investment opportunity. And once that's done, this is the best part. I love this part. So, if you need help, right? So we've developed our own AI agent, and her name is Sophie. And essentially, if you need help to develop your product, to develop your EOI page, you can just literally drag and drop your pitch deck right into Sophie, and Sophie will generate all sorts of content for you and help you write your page. I mean, that's just next level. And essentially, if you're looking to come up with some really cool taglines and you don't really have, the greatest, hottest taglines and you want to improve that, well, you just key into Sophie. I want to give me 3 options, Sophie, and give me some great taglines with 3 options, and she'll just spit it out in an instant. So we're using, obviously the OpenAI large language model, and we're integrated a specific product for VentureCrowd users. And once they sign up, they get access to Sophie. So Sophie is behind the login page. So you don't get access to Sophie unless you are a VentureCrowd user, which is just an incredible tool. So Sophie helps you do all sorts of stuff. You cut and paste some of those amazing taglines if you can't come up with your own taglines. Essentially, once your EOI page is built, you can preview that page. And once you preview that page, you get a quick snapshot of what it looks like and what the world's about to see. So this is a really fantastic representation of one could call this a very basic IM. And essentially, once you've established this product, this page, it becomes instantly shareable once it's been submitted and reviewed and approved for publishing. It becomes instantly shareable, and that once you share that, essentially the world can see it. So let's move on to the next section, which I think is actually, I probably got a little bit ahead of myself because I'm so excited. But essentially, we're on the next page. Sorry. There you go. Thanks, Sam. And so in the publishing section, basically you get to review everything about your company, your page, you make sure everything's looking great. Very simple, straightforward. You can preview that page like I mentioned a few seconds ago. When you're finally happy with that page, the page will go through a submission process. It goes into our database. Our internal team will review it. Once they review the page, they essentially will make it available. So the founder clicks a few buttons to submit that page for review. They submit, boom, once that's done, it's submitted, right? So it's so easy. And essentially, once it's submitted, they can return to their companies, and here's another amazing part of this product. You can build as many companies as you want. If you literally want to build multiple companies in this, expression of interest platform, you can build as many as you want. You don't have to build one. You can build 2. You can build 3. So if you are a founder and you're a serial founder, which there's a lot of serial entrepreneurs out there that are like having 2 or 3 startups, and you might be able to build 2 or 3 companies if you so wished, and you could push those expression of interests out to the world and have the world look at them, and then determine which iteration of your business and your business model you're looking to raise capital for, and which one is the most exciting for you. I think we've gone into a bit of a section. Maybe you can just skip forward through this, Em, if that's okay. Thank you. So once a page is published, and now you can manage your page. And what happens here is you can access your company's tab, and you can see the list of investors that have expressed interest, and you can see the dollar amount that they've expressed, so the aggregated dollar amount. You can actually do things with this. You can actually download that list, and you can then pull that data off. You can create your own emails, and you can actually go off and communicate to all the leads that you have generated through this expression of interest page. So it's a really powerful product. Let's move to the last piece. We can, Em. So this is where this is the sort of the when the Wizard of Oz pulls back the screen, this is what we see. So essentially, we have a mission control panel, and in this mission control panel, we can see moment by moment in real time the signups that are coming on. We can also see at what stage those expression of interest founders are on their journey. So whether they've completed certain tasks or whether certain tasks are yet to be completed, we can determine and look in and dive into those bits of information. So we can literally dive into every single EOI and have a look at all the content that the founder has created. So we can determine whether it's safe for publishing, whether it meets any sort of privacy laws and everything like that. And we definitely have an internal team that's very strict on all that. So so this is where all the mission control parts happen. So essentially, we're super excited. This is a new addition to our technology platform, which is ultimately a platform that enables investors to invest into deals. And this is the next iteration of our technology, which will now enable founders to come on platform, to sign up, to create their own EOI pages, launch those EOI pages, publish them to the world, get interest from investors, and then be ready for a capital raising event. Back over to you, Steve.
Nice, Johnny. Thank you. Yeah, so the next 24 months are really, really exciting off the back of this. This is obviously not the end of our roadmap. This is just the tip of the iceberg. This product is currently in market as of yesterday. Within the first 24 hours, we had 8 companies organically sign up, companies we don't know that are not in our pipeline, who are currently using it with 0 promotion. And we're not intending to do any promotion for at least the next sort of 4 to 6 weeks while we just test and play and try to break it. So we are comforted by the fact that organically the VentureCrowd brand has the trust of, at least 8 new founders in 24 hours who found this on their own and are building their own EOIs with us without any external marketing. So by the 30th of June of this year, the investment software that Johnny was just describing will go to the next step, and that is to give founders self-service, end-to-end digital capital raising solution beyond EOI, all the way from developing their capital raising strategy to building campaign collateral, to mastering distribution, to converting interest into investment, and all of that supported by Sophie, our proprietary AI-enabled capital raising coach, who's been trained using 10 years worth of proprietary VentureCrowd capital raising experience and data that no one else in the market has. And when their campaign closes, the founder simply gets one single line item onto their cap table and uses the VentureCrowd platform to both communicate updates and corporate actions and hopefully to conduct their future raises. We're positioning VentureCrowd as the only capital platform founders will ever need. Now, Johnny mentioned previously that it's currently the AI agent that's in there at the moment is using ChatGPT. That is absolutely true. Our intention is to build proprietary AI agents in the coming months so that by the 30th of June, what it's actually delivering to you is responses that are based on proprietary VentureCrowd campaign experience and data. So to the numbers, perhaps, as at the end of January this year, we generated $3.9 million worth of gross revenue financial year to date, and we are on track to hit 7.5 this financial year. In 2025, we're conservatively forecasting gross revenue of just over $14 million, which will represent a 96% year-on-year increase in gross revenue and about 54% increase in gross margin. And we believe that those projections are conservative. Let me show you now for a minute what's possible if this product, a self-serve capital raising coach that's AI enabled, that has learned from 10 years worth of VentureCrowd campaign experience and data in the hands of founders to self-serve their own capital raising process from end to end themselves. If that product does what we believe it's truly possible to do, even a fraction of it, then the financial projections of the company are significantly greater than what you're looking at now. This is what we think is possible. In 2023, over 406,000 new businesses entered the market, taking the total number of businesses operating in Australia to over 2.5 million. We estimate that about 10% of those businesses, or about 40,000, will be actively seeking and be suitable for early stage venture, angel investment, or other private capital. In 2023, for example, about $7 billion was actually raised across 800 deals in early stage startups through traditional fundraising methods. Now, VentureCrowd is conservatively targeting 1% of that market, which is 4,000 businesses a year, which is 330 signups a month. If each of those companies were to raise $500,000 using our technology at a 5% fee for VentureCrowd, our annual revenue would reach $100 million within a few years from this product alone in one jurisdiction. And if you were to apply a revenue multiple of 10 times to that $100 million annual recurring revenue number, and 10 times is pretty reasonable for a scalable technology business like this, where it's basically no touch, all tech, pure software. VentureCrowd's valuation at that point would be defensibly $1 million valuation on Australian revenues alone from this product alone. Now, that's a massive number, right? So I would forgive you for being skeptical. In fact, when I sat down to work out what is the target market size, what is the defensible, serviceable market size, and what assumptions might we make to target that would be realistic and palatable, I found that number pretty high too. So if you're like me and you think 4,000 new users a year is too ambitious, even if 400 new users a year raised, can we go to the next slide, please, Em? Even if 400 new users a year were to raise $500,000 each at a 5% fee for VentureCrowd, that alone would take our annual recurring revenue to $10 million. And that would result in a valuation of about $100 million from one product alone in one jurisdiction. So even in a very conservative scenario, in the next 2 years, the next 2 years present a very significant opportunity for value uplift in this business. And that is something that we are very, very excited about. Now, if you'd like to participate in that journey, there are two ways you can do that. The first is, for those that want to take an equity position, there's a small amount of equity remaining in our convertible note round, which you'll see at the bottom right-hand side of that screen. That raise is public. It's available to any wholesale investor via our website. It's a 20% conversion on the next capital raise. There's a 7.5% coupon, and that's live now. For those that want to take a debt position, we've also recently opened a private offer to some of our top investors, which will not be available on the VentureCrowd website. It's a promissory note with a 20% coupon and a 24-month term. The details of that are at the top right-hand corner of your screen. The term of that note is intentionally designed. The coupon of that note is intentionally designed to be highly attractive in order to close it by the end of March. And at the moment, the funnel is looking pretty strong for that for obvious reasons. The 24-month term coincides with a significant performance fee that VentureCrowd is entitled from one of the many property development projects that we are overseeing, in particular, the one in Carrara on the Gold Coast. So we've got a very clear line of sight as to how and when those notes will be repaid, making repayment risk very low compared to what is a very, very strong yield. Now, that funding allows us to accelerate the current product and scale users and usage as quickly as we can. And by the end of 2024, with more usage data under our belt, we intend to then go to a larger institutional growth capital round at a higher valuation. And it will be that growth capital round that we intend will trigger the conversion of the convertible note that we're offering today. If we get that right, it's basically a 20% uplift for investors in under a year. Now, Emily is shortly going to bring up a poll, giving you the opportunity to indicate your interest in participating in the raise, or if you prefer to find out more information from one of our investment managers or from myself if you'd like to speak to me. So if you'd like to be part of the journey, we'd love to have you on board. You will be joining some really amazing lead investors, including Brisbane Venture Studio, Joseph Mark, the Web3 Venture Capital Fund, Optio Capital, and blockchain development house MakerX, as well as a group of highly accomplished VentureCrowd members, including Sean Gregory, former PwC executive board member and national deals leader, and Connie McKeage, who was the founder and CEO of the highly successful fintech OneView, which she built and sold to Iris for $115 million, amongst a number of others. So if you are interested in investing in either of the debt or capital parts of the offer, please let us know using the poll tonight, and our team will be in contact with anyone who indicates an interest tomorrow morning to prioritise securing your allocation. So those that indicate an interest tonight will secure their allocation first. Once the round will simply close as soon as it is full. If you'd like to discuss the business or our growth plans with me personally, or you want some more detail, you want to dig into anything that we've said, because we've kind of skimmed over the top of it, and I know you'll have questions. We can deal with some of them tonight, but some of you might just want a one-on-one conversation. I'm going to be in Melbourne next week, hosting a series of investor events from Monday through to Thursday. I'll be at the Apollo in West Melbourne on Tuesday night. That's a public event for VentureCrowd investors. So please reach out to our team if you'd like to come along to that, and we can have a chat on the night. Alternatively, I do have time between Monday and Thursday to meet with people one-on-one if you prefer. If you're a Sydney investor, I'll be back in Sydney the following week. And as always happy to meet with investors to go through our plans in a little bit more detail. Now we're going to turn to Q&A in the last kind of 10 minutes or so of this event. We're super happy to take your questions, but I would ask that you keep your questions to the discussions we've been having today. The offer itself, our growth plans, our numbers. Happy to talk about any of those things. They will be relevant to attendees of the webinar. But if your questions are about VC products you've invested in or some other historic matter, please do contact our investor relations team, and we can discuss those with you at a more appropriate time. Emily, over to you.
Thank you. So we've got what process is used during the review process. Is this a due diligence exercise or simply an editing exercise? Good question.
Yeah. Do you want to take that, Johnny?
Yeah, sure. So what process is used during the review process? Well, essentially, like one of the things that's important to understand is that we are agnostic, right? So we're not positioning ourselves as a venture capital firm, and therefore we don't make decisions based on which startups or which businesses can be creating an EOI page or which cannot. So it's very important to know what due diligence means in the industry is quite different to what we mean by due diligence. So industry due diligence means diving into the company's financials, diving into the company's its team, its business model, and assessing its investment viability. That we don't do, right? So our job is not to determine or to decide if the business is an investment opportunity that's favorable for you or not. Our job is to build a platform to enable those founders to launch their EY expressions of interest, to upload the content, to have those conversations with investors, to basically garner the interest from investors, and to create those relationships with investors, and then those investors and the founders can start to determine, those due diligence steps.
Yeah,
yeah.
Sorry, Johnny, go on.
I was just going to say, once that happens, and we have an aggregate of investors that are interested in making an investment, that's when VentureCrowd steps in to enable that investment to complete and close, and that becomes our job to assist both founder and investor to make that investment.
Yeah, that's right. So the only thing I'd add to that is what we're really talking about is moving from a digital services business to a full-on platform, right? And that means everything we do from this point onwards needs to be able to scale and scale without human intervention. If it can't do that, then it is reserved for angel groups and VC funds and other firms that do full due diligence in the usual way. There is a lot of good people doing that kind of work, but that's not the business we are building. Let me give you an example of how this particular product and what we'll have by the 30th of June services a group of people that no one else in the market is particularly interested in because the cost to serve is so high. Across the country right now, there are thousands and thousands and thousands of companies that are running through accelerator and incubator programs, both run by VC firms, but also run by sector-specific experts, also run by universities and so on. Every single one of those companies will need to have a presence online that tells their investment story when they go to demo day. Right now, there is zero solution for that, zero. For obvious reasons. They're too early, the due diligence is cost ineffective, all that stuff. But there is a software product that we have that we are trying to leverage that makes a solution available to potentially thousands of companies in Australia alone every single year. And that's just that group. What Johnny's talking, sorry, one more thing on that, to your question about due diligence. At that point, the level of compliance we need to put over the top of that is relatively limited, and it is limited based on whatever our financial services obligations are under our license. It's not a public campaign at that point. It doesn't appear on the VentureCrowd website. It is simply a software as a service where that founder can build what they need to build, enabled by our guidance and our AI agent, and then distribute it to whoever they want. If you think about it like this, it's basically the beginning of the digitization of a friends and family round. I hope that's resonating in answer to that question.
Thanks, Steve. We've got another question. How does this platform compare to Virtual, what Virtual are doing? Sorry.
Yeah, that's a really good question. So let me give you a couple of differences between us and Virtual. I get that a lot. Firstly, we have 2 Australian financial services licenses that provide a range of authorizations to provide a range of financial services. We do have an authorization, obviously, to act as a crowdsourced funding intermediary, but it's not the only thing we do. Retail crowdsourced funding under the CSF amendments to the Corporations Act is not all we do. In fact, it's a very small part of what we do. Sometimes companies need to raise wholesale money. Other times, companies need to be able to raise debt. Sometimes they need to be able to raise follow-on rounds. We want to be there for that entire journey. And that means being able to put in the hands of a founder the right financial instrument for the right part of their growth journey. I'm going to use the Virtual example because that's the question that's been asked, but Virtual doesn't and can't do that. where retail crowdsourced funding is appropriate for a company, and it is for lots of companies, particularly those with a consumer-facing bent, then we would recommend retail crowdsourced funding to that company. But it's not always appropriate, and we want to be able to provide, the full capital strategy solution to companies and to provide that digitally. I hope that answers the question, Phil.
Thanks, Steve. Is this similar for private equity groups, syndicates, etc., to raise capital via this platform for multiple companies via one profile?
Yeah, that's a great question. So I said to you earlier that we've had to say no to lots of ideas in the business while we focus on delivering this product for founders. And one of the ideas that was that has been put on the fast follow part of our technology roadmap is one that I wanted. And we will have this in market fairly soon. And that's exactly for the group that you're talking about. If you think about it, the technology that we have and we're putting in the hands of founders does a number of things. It helps them to build their capital raising campaign. It helps them to structure their capital narrative. It's got all sorts of video and AI guidance in there to help them do this themselves, teach them how to fish rather than give them a fish. But really what it does at the end of all of that is it syndicates a number of different investors digitally into a single special purpose vehicle that's managed by VentureCrowd. Now, if I'm a syndicate lead or a PE group, I want that too on a deal by deal basis. So that there is a subset of that technology product which is equally applicable to syndicate leads. And because of my experience with angel syndicates, I know that there's a massive demand for that. So the short answer is the next iteration of this product will be focused on exactly the group that you're talking about. The terminology we will use is syndicate leads, and I expect that, and we already do this for a number of angel groups across the country, but we don't do it. We do it in a slightly higher touch manner. So we want to take that entire process, digitize the whole thing, and give it to syndicate leads so that they can run their syndicate without ever having to talk to anybody at VentureCrowd. So stay tuned.
Great. Thanks, Steve. Have we got any more questions? Yes, one just came through. Will you still offer wholesale deals that are full touch and have been vetted that are potentially running larger rounds, or are you moving away from that?
No, we will absolutely do that. I'm going to throw to Johnny in just a moment, but let me explain from my perspective how I see the importance of the thing that we're about to announce, the self-service thing, the thing that is not public, the thing that's available to everybody, right? As many companies as possible. Johnny showed you a control panel. That tells us a lot about the companies that are engaging in the EOI process with their own investors and their own networks. Tells us who's engaging in that, how many people are engaging in that, how quickly they're engaging in that. It gives us a level, it gives us a quality of performance data that you just can't get from conversations with a founder. That data is going to feed into the kinds of wholesale deals that we will provide a full touch service for, but it'll do it in a way that's giving us real live engagement data with the market. Johnny, do you want to take it from here?
Yeah, of course. Essentially, the thing that I find so exciting about it is, we can have concurrently hundreds and hundreds of companies signing up from all over the world. So it's not, jurisdiction, specific. But of course, like what happens is all these companies, they start inputting their information. And once they input their information, we get to see that information. We get to see all that data. And through that, we can then obviously decide which becomes high touch opportunities for us. And we can sift through all this data and determine which are the deal opportunities that actually represent wholesale opportunities, represent, maybe potentially larger round opportunities, and which then turn into our existing operations of, high touch, full service, then diving deeper into the founder story, working one-on-one with the founder and then converting that back to our investors and communicating to our investors. So essentially what it does is it builds a very large catchment, of founders all over the world to submit their information, and allowing us to hand select, the deals that we feel that align with, our strengths and align with our values and align with everything that we stand for, and to support those founders even further with diving into our network of investors and so on, and VentureCrowd's network of investors. So essentially, we've generated a very scalable product to look at the next innovation and the future of innovative companies with just literally this back-end system.
Yeah, that's right. So hopefully I hope that answers the question. There's a lot of detail in this strategy that we've been building over the last 12 months. It's very difficult to summarize it in half an hour. So if you have any other questions, please do reach out. As I said, always happy to talk to you offline.
We've got another one with the promissory note mentioned at 20% for 24 months. Is the maturity date guaranteed by VentureCrowd?
Yeah, correct. So VentureCrowd Holdings, which is the holding company of the entire VentureCrowd group, will guarantee the performance of that note, including redemption and repayment.
You mentioned a valuation of 1 billion, also valuation of 100 million. What does the valuation look like, including the other revenue producing sides of the business?
So at the moment, the approach we've been taking to valuation is to run a competitive analysis of similar kinds of businesses where the information is available to us, and we've formed a view on what similar kinds of businesses are raising at or have been raising at over the last 12 months. The view that we can send you this information if you like. It's in the previous IM, but it's somewhere between kind of 8 and 15 times revenue, depending on the level of scalability of the product. And so we spent the last 12 months focusing on one thing and one thing only, and that is scalability, right? So at our last round, we went to the market and said, here's what similar businesses, Crowdcube, Seeders, Virtual was in there, and a bunch of others have been raising at. We believe that we sit kind of at the lower end of that range, because whilst we have a full service digital investment platform for investors, we knew we had work to do on the founder side. So we went to market with what I consider to be a very reasonable revenue multiple at the lower end of that range, 8.5 times revenue of the previous year's revenue. So I would say to you, so last time we went to market, that's how we valued our company. We based it off industry comparables, and we conservatively self-selected the lower end of that range and then multiplied that by our previous year's revenue. And I would suggest to you that a fair valuation of the business today would be exactly that. Therefore, it would be something like 8.5 times last year FY23 revenue, which was $5.9 million. Right? So it'd be, close to 60 mil would be my suggestion. Now, because of the tightness of the last, 12 months of the private capital markets, we wanted to remove the issue of valuation from the debate with investors, because fair enough, at the moment, in the last 12 months, people have been nervous about equity. And so where people wanted to take an equity position because they believed in the growth of the business, and there's lots of those people, but they didn't want to have a conversation about valuation or didn't quite buy that valuation at the time, we felt the best way to approach it is to simply structure it as a convertible note. So 20% discount. We don't have to have a conversation about valuation today. It converts at the next qualifying round. When will that be? Well, we intend to be in market by the end of this calendar year with an institutional round off the back of the data and the usage we get from this product and the next couple of months of iterations of this product. So we go to institutional round with that, and that will be the trigger point for the conversion of people who invest in this convertible round at a 20% discount. I mean, I'm open to other discussions on valuations that are sensible, where there's a relatively, meaningful check size, we can definitely have those conversations offline. But that's the approach that we've taken so far.
Thanks, Steve. Last question. You could source funding at less than 20%. Why aren't we doing that?
Yeah, we certainly can. But I want to close that $4 million note in the next 30 days. And so to do that, I want to make that super attractive to people who believe in where we're going, believe in the repayability of the note, which is really the only assessment you need to make, and then buy into that 20% yield as a pretty strong risk return profile. It's really about speed. So that's the answer.
Great. Thank you so much, Steve.
Awesome.
And there was a few questions about previous rounds, so I'll get back to you personally on those ones via email. Now, should you have any more questions from today's webinar or wish to attend our Melbourne event on Tuesday, please email us at investor@venturecrowd.com.au and we'll get back to you with your answers or send you the invitation. Thank you to Steve, Johnny, and everyone who tuned in today. I hope that you enjoy the rest of your week. Thank you.
Everybody. Good night.